Hey everyone, and welcome to another episode of Exponential Wealth. I'm your host, Aaron B. Moore, and I hope everyone out there is having a fantastic day when you get a chance to listen to this episode. Listen, we have a fantastic guest, Carly Seiff of Compass Real Estate. Carly has been in the business for over 13 years, working out of the location in Burlingame, beautiful Burlingame, California, serving all of San Mateo on both the buyer and the seller side. Carly has years of insight, and we are only going to be scratching the surface today. So stick around for a great show. Real estate is so important. It's one of the most important decisions we can make to buy or sell real estate. Why is that? It's our home. It's where we live. It's where we raise our families. It's where we were raised when we were kids. It's a place that we didn't have that we wanted. It's a place of aspiration. It's a place of dreams. And it's the only thing that's real in the investing world. It's tangible. You can touch it and you can fix it. You can make it more valuable. Today's guest, Carly Seiff of Compass Real Estate here in Burlingame, and I are going to talk about some real estate topics of interest. And I know everyone, if you don't already own real estate, that's on your mind, either because you're choosing to rent or you want to continue your journey. But let's jump into it, Carly. First of all, how are you doing? Thanks so much for being here.
I'm doing great, Aaron. Thanks so much for having me. It's such a delight and a pleasure to be back.
Yeah. Why is real estate so important to you?
I mean, you summed it up really well, right? It's your home. People build emotional connections to that wooden box that they come back to every day, right? And like you said, it's a tangible investment, right? It's an investment that we can improve over time, right? You can see the changes every day if you put work into building your home. So it's the place you lay your head at night. It's the place that you have memories of your children growing up, all of that. And it's something that you can use to pass on generational wealth, to build net worth. It's a huge asset for most people. It's their largest financial asset. So it's a lot of things.
That's a
Absolutely.
beautiful answer, Carly. Thank you. So we taking your time. Thank you so much for being here. We have
Yeah, absolutely.
professional realtor who has, I won't ask you how many unless you have the figure, has helped countless families here in the San Mateo County area and have been
Yeah.
instrumental for me and my family as we've navigated real estate here. So first of all, thank you
Yeah,
to
absolutely.
serve. So
The
we're lucky
answer
to
is
have
I'm
you.
not totally sure. At least a handful of hundred, but I don't know exactly.
Nice
Yeah,
handful of hundred,
yeah,
so 100 more.
yeah, yeah,
Um,
yeah.
so Carly, if folks are, we'll talk about interest rates in a little bit because I know that's on top of people's minds. We'll talk about propositions that are relevant, and we'll
Hmm.
talk about the NAR settlement, and as well as a new thing, a program that was brought back called the California Dream for All. So that'll be what we talk about in our show.
Great.
But just from the very top, clients want to buy a home. So I know that you
Yeah.
represent both buyers and sellers. But typically, people in the Bay Area are coming here, they're taking a job or they've been renting. Salary's been large enough for long enough where they're starting to consider it. Um, if you're looking to buy, what's the first thing that you need to do?
Great question. Great question, Aaron. So if you're looking to buy, the first thing you need to do is figure out if you're financially ready. So if you're managed, if you have an advisor like Aaron who's helping you make financial plans for the future, you might start with that professional. Honestly, if you're lucky enough to have someone like a financial advisor, wealth advisor, some people even have these services sometimes through their company if they're not ready yet to be managed on their own. So you might start there. If you don't, then you should start with a mortgage professional and or a realtor. You could talk to a realtor if you happen to know one or get referred to one by a friend or family member, just to get a little bit of professional advice. And that realtor, like I always would do if I met buyers for the first time, I would have a chat with them, but then I would quickly put them in touch with a mortgage advisor, right? They need to find out if they qualify. That's really the important thing, because a lot of people have dreams about owning property, and it's really good to have those, but in order to make good on them, eventually you have to put the money down, right, to do it. And that money doesn't come out of thin air, so you got to find out if you're going to be approved.
Right.
Yeah.
And that's called,
Mhm.
Carly, to summarize, that's called the pre-qualification letter.
Correct. Yes. So you
You'll
need
be
to talk to a
introduced.
bank.
Right.
Yep.
Good.
Sorry,
Okay,
go,
good.
yeah, go for it. Yeah. Yeah. So you need
Cool.
to get that pre-qualification or pre-approval letter
Yep.
from a mortgage lender. It doesn't even have to be the mortgage lender that you ultimately use, but you need to get some feedback to begin.
That'll tell you how much house you can buy.
Yep.
Right.
You
Awesome.
got it.
And of
Yeah.
course, starting with, if clients of mine start with me, then it's really goes to me, and then it goes to the lender, and then the realtor.
Mhm.
Right.
Right. But you could
Um,
tell them like, okay, this is where this is the bucket of money that could be available for a down payment, and like based on our plan, this is how much I could see you spending on a home, right? And staying within the goals that we aligned. Like you could give them that kind of feedback, right?
right. Right. Yeah,
Yeah.
because that's definitely a question. Can I buy this home? Can I afford it? That's one consideration. What the monthlies
Yep.
will be, property tax, insurance, and
Yep.
mortgage and interest, and then of course the down payment, right? And I think that's
Hmm.
another big one. I
Yeah.
loved my next guest is going to be a mortgage lender, Carly, because
Oh, cool.
right, because I think people are stuck with, just a small tangent. People are
Yeah.
kind of stuck with, oh, I need to put 20% down. And
Right.
typically you can get a better interest rate on your loan, but I don't know. And actually that goes kind of into my next question, which is lay it out for us, the case to buy real estate today. In terms
Mm-hmm.
of,
Mm-hmm.
I think people have been shocked by like the historic rise in interest rates. And of course, that was on purpose to dampen the economy. But for all of us
Right.
who are looking
Right.
to get into our home or the next home,
Yeah.
ooh, I
Yeah.
mean, anything to do with borrowing money has become much more challenging. But I know there's a
Yeah.
case for purchasing real estate. What's the case today that you see, and what's our path forward?
Yeah, absolutely. So all of the financial indicators are there that we're moving in the right direction, right? Despite the fact that rates are higher, consumer confidence is up. The stock market, although sometimes has its daily, ups and downs, has generally been doing a lot better than it did last year. Unemployment continues to be low, right? So all signs are pointing to an economy that's still growing. So that's a good thing from the perspective of there will be buyers for the real estate you own today in the future. So it means that real estate's still a solid investment, right? And when we look over time, yes, sometimes there's those year to year blips, or we had this mild recession, non-recession that recurred for like a year and a half. Guess what? We're already out of it. The homes that kind of softened in price during that have already appreciated since then, right? So it's just proven time and time again to be a solid investment, regardless of the rate that you purchased it at. If you own it for a long time, you will make money, at least here for sure in our area. And as far as rates go, they're not dropping anytime soon, but there's still strong belief industry wide that, and when I talk to mortgage lenders, that they will be lower when all of this Fed fumbling is done with, you know? And so we can expect that instead of 6.5, like they will be 5, but maybe instead of in a few months, that's coming in a year. It's hard to know exactly. We had thought that it would be the end of this year, but it won't be that far off. So there's opportunities to refinance as well. So my last point there is when you buy, when rates are low, prices are high because everyone can push, right? Like they can really max out that loan amount when rates are low. When you buy when rates are higher, yes, there's still competitive properties in our area and multiple bids, and you feel like you're paying a lot of money because our real estate is expensive on the peninsula, but you're actually buying at a price within the market of higher rates. And if that same home was on the market again, 2% less in interest rate, we know how much more it would sell for, right?
Wow.
So you're going to have kind of instant appreciation based on the fact that that property will be worth more as soon as rates are lower. Yeah.
That's a great argument. That's a
It
great
is. We
argument.
can see it honestly when we map out like $2 million house today. What is the monthly payment on that?
Well,
And
and
then
that,
we look at, and then we look at like the monthly payment for what that home would have been with a lower interest rate. and we can see the exact difference in the market over time. Anyways, please go for it.
Right. No, I was just going to say, it actually gives more. I mean, yeah, that's the story. You're buying in San Francisco, San Mateo, anywhere on the peninsula. There's going to be
Yep.
10 to 20 offers, and it's going to go several $100,000 over in cash, right? Essentially. So if you're not in a position to pull out an extra $200,000 for a down payment, well, you have more of an opportunity to buy a home. And then, of course, it's painful in the beginning. It always is when you buy real estate.
Yeah, but it always is. Yeah.
Right. And then you have the opportunity to refinance. There it is. There's your case, folks.
Mm-hmm.
And you know what's funny, Carly? I do have clients coming in saying there's stuff in the pipeline that they're looking to buy or looking to sell, right? Because some people, because again, it goes back to why real estate is so important, because we live there. And it means so much more than like just a thing that you own. So
absolutely.
That's beautiful. All right, cool. So that was the case. If you're in the market, contact Carly, because it looks like now could be the right time to buy. It's getting warm outside. It's beautiful here, and still with a little crisp in the air. So now's the time.
Yep.
We mentioned California Dream for All. So I know that there's right. So that's a program that has come back. Do you mind talking about how people could potentially qualify for that program?
Sure. Yeah. So California over the past several years, as we all know, I think has really been aware of the housing issue that we have, and because it's so desirable to live here, it's so expensive. So the state has been pushing programs to try to make homeownership more available, right? So California Dream for All came out last year, but it was so popular that the applications shut down. I believe it was like in 24 hours or something. It was like some extremely short window, because they took them on a first come first serve basis, right? It was like this nuts grab, this whole thing. So California Dream for All is a down payment assistance program, and it's an equity sharing program, right? So when you apply for this program, you get up to 20% of like the home value that you're looking to purchase as down payment assistance. Oh, wow. And you get that as, you can use that for your down payment. You can use that just as another mortgage to supplement. Say you have $100K, but you don't have the whole down payment. You can use this as a supplement for that, or to lower the amount of the other mortgage that you need to purchase the property. But ultimately, if you sell that home in the future, you will pay back the loan. And then if you've made money, you will pay back whatever percentage. If you took advantage of 20%, then you would pay back 20% of your appreciation at that point, as kind of right? So they share in your growth as well, right? So so it's a great program for those who can't otherwise find the down payment to buy, to help them dip their toe into home ownership and get started. You do have to be, this time around, it's not first come first serve. They're taking applications until the end of April 28th or 29th, I believe. Someone
so we have look this it up, month only.
This month only, but at least it's not one day.
Right.
Let's say that. And then it's going to be a lottery from everyone who applies during that window, right? So you won't get penalized for not applying on the first day, but you do have to be a first generation homeowner.
First generation homeowner.
Meaning your parents cannot own a home in the US.
Cannot own a home currently. That's the means.
Yes. Right. So so if you would be the first generation homeowner in your family, you qualify. I believe there's also a separate qualification for anyone who was ever in the foster care system, because that's like a population that has a harder time sometimes launching into homeownership. So regardless of homeownership status of your family, you could take advantage of that. And then there are income limits.
Income limits. Yeah, that was my next question.
Yeah, every county has a separate limit. So San Mateo County's is pretty high. It's 277,000. But you do have to fall underneath that income.
That's what you need to buy that's what you need.
But that's kind of what you need to buy a house,
condo,
right? So
to own a condo in San Mateo, not a home, a condo. You need to earn 207. It's pretty. You need.
It's a tricky balance. So I would guess someone who's making like, more than 150 per year, but under the limit, but is in a good, growth industry with their job, and they're starting off young, who could qualify for this kind of program, could do well with it in the long term.
Right.
So
But
yeah,
but Carly, here's my deal long term. And it's funny, my
yeah,
first home, this was
yeah,
before it was a statewide program, but this is Santa Cruz
yeah,
County. I
yeah.
did that down payment. I went through the down payment assistance program.
Oh, you
And it's
did.
funny, I have my tax
Right.
returns from 2011 and like from 2008. I'm looking at my tax
Yeah,
return. My
yeah,
adjusted gross income was pretty low back then as a
yeah,
teacher. Those were my teacher days. But anyways, I got
yeah.
into the program with 3% down. But long term,
Wow.
all the equity, I mean, you're paying interest on the loan, the
Yeah.
down payment. So it gets you in the home, but then there's all these caveats. So I don't know if I still don't
Mm-hmm.
know.
Mm-hmm.
Maybe if it's somebody that really just wants to like doesn't have what are the qualifications, aren't really looking to pass the home down for wealth to their children. So maybe
Right.
small sliver of the population or folks who don't
I think
want to
it could.
rent.
Yeah. You don't want to rent, and maybe you're young enough in your financial life that in 10 years from now, say the property had appreciated, you might have also have all of your, you might have significantly more savings, excuse me, of your own by then, that
Right.
maybe if you don't get all of the equity out, but you take some of that with you, it helps launch you into the next, right? And you could take a traditional purchase on the next home, right?
Right.
So, yeah.
And and actually that's what I did. Sold it within 2 years and then
Yeah.
bought the place here in San Mateo. All right, cool. Let's move
Yeah.
on.
Yeah. Yeah.
So but that's great that they have programs like that for folks because we
Yeah.
are just,
Yeah.
it, having been as a teacher, lower income, working with those types of people,
Yeah.
really hard. Like to say you need, 277,000 sounds insulting, right? Because
I know.
that's just the
I know.
reality.
And
That's the economic reality living
yeah.
around here.
Yeah, you don't, but yeah, I mean, to just like as an aside, it's pretty common for the most of the people that I work with who are buying, first, let's say like first time buyers. Sometimes you have an individual, oftentimes though, it's a couple or a partnership because they need the dual income, right? To put it together, to make that payment. So,
Right.
yep, yeah, it's
All right,
reality
good.
for sure.
Good. Well, still, it's a great real estate's still a great investment in California, and we have to have a place to live and kind of
To have a
non-negotiable.
place to live anyways, you might as well get an investment out of it.
You might as
Absolutely.
well make it an investment, get your money working
Yeah.
for you. All right,
Yeah.
cool.
When rent's so high anyways.
Yeah, I
Yeah.
mean, there's a lot of considerations, right, that we take a look at. We'll analyze it. You look at, I mean, we do this in
Yeah.
financial planning. It's
Yeah.
all right, you can rent. The problem with rent is that it's unknown. You don't know if the landlord's going to have you move out because they want to buy or sell. So there's some
Right.
instability in your living situation, which
Yeah.
if you have kids, if you're looking for stability, it's kind of rough. If you're more
Yeah.
flexible or have faith that you'll find the next rental if there is an issue, you're not paying property tax, you're not paying, right? You're paying insurance, but renter's insurance.
Yeah.
So there's some argument
Yeah.
there that you're saving. And then if there's damage to
Mhm.
the home or wear and tear,
Right.
but also you don't get a home. So I think there's different ways to slice and dice it, but I don't know. I'm a supporter of real estate just because I've seen it work for my family and for me. And
Yeah.
that's why I have
Yeah.
you on the phone because on the phone.
Yeah. I think in the dream, very minority situation where, you have some old lady landlord who rents to you for 20 years for like way under market, and you're able to save money during that period of time. I can understand financially why you might want to take advantage of that. The problem is that that isn't the case for most people. And for most people, they're just chasing that sort of rent monster forever. And whenever they want to move into a bigger place or a better area, they're paying more and more and more every time, right? Um, and especially if they live in any kind of like corporately managed apartment building, those 10% increases come annually.
Anyway.
So,
And then
yeah,
right. And then you never get the chance of buying into the home and then having your payments go down through time, which is what a
right,
mortgage does,
right.
right? It
Yeah, you
feels
don't
like,
get to make it your own
yeah.
and paying it down. Yeah, absolutely.
All right, awesome. Well, um, I am sure that if people have listened thus far and they're interested in our conversation,
Yeah.
reach out reach out to Carly, clients of mine or prospects looking to get qualified to buy. That's what we do. It's what we help our clients with. So um,
Absolutely.
best to talk to a professional to see if you're ready, right? Whether it's your first place or looking to upgrade from the condo to the single family, or the single
Yeah.
family to, I don't know, the next real estate investment. So that's the
Hmm.
next level.
Absolutely. Yeah.
Last topic before I let you go, the NAR settlement. So this came out of Chicago, is the National Association of Realtors. About
Hmm.
a couple came. What state what state did it start in? Where the
Okay, I think it was
plaintiffs,
two. There were two, to my knowledge. I don't remember which one was actually first, but there was one in Indiana and one in Missouri, I believe.
right?
Um, but I'm not necessarily the expert on the cases. That's that's for the
Okay.
lawyer. So my understanding of the um, the motivation, right? The reason for the lawsuits as they began is that the consumers in those cases felt they did not have transparency into what they were paying, right? That's the heart of the issue. And so we could argue all day about the facts of like, well, they signed a contract, so they should have known and all these things. But the truth of the matter is they didn't know. They didn't know enough to the point where they felt wronged, and so it was really important for them to pursue.
Right.
And so the National Association of Realtors there's a proposed settlement, all the books now, um, and when that's approved, or whatever you call that in court language, when the settlement becomes official, what will happen for realtors is that starting July 1st, we will need to have a buyer representation agreement for every buyer we're working with, just like we've always had listing agreements for every seller that we're working with, right? And so it's been a kind of a standard in our industry for a long time that, someone or past coworker or neighbor says they want to buy, and you just kind of start showing them homes, right? And then when they find, of course, you educate them, show them different neighborhoods, you talk about pricing, you help them get a mortgage pre-approval. But in the end, you're just kind of working without any paperwork in place.
Right.
The only paperwork comes when they make an offer, right? And that's how it's mostly been done for a long time. And what's kind of wrong about that is that it's casual, right? And in the end, it's a professional industry where you're hiring someone as as an advisor, right, to be your expert in this process. So why wouldn't you have a contract with that person,
Mm.
right? It makes sense. So I think ultimately that one of those rules changes is going to be really good for the real estate industry, and it's going to push a professionalization, and it's also going to deter those people who kind of like side hustle, super part-time agents, because they won't be able to just kind of grab a deal, so to speak, right? They're
Mm.
going to need to go through that process with buyers, just like any full-time agent would. So I
Right.
think that's going to be good. The other rules change is that currently in the MLS, when I like list a property for sale, I'm posting in there how much is the seller offering for the commission to the buyer's agent, right? There's part of the listing on the agent end shows like, hey, how much can you get paid if you sell this home to your client? And
And that different when you log in,
mhm,
you can see the different commissions for buying different homes, essentially.
correct. And so my client won't see that when they look online, when they look in my portal, I look on Zillow or wherever they look, but I see that. And so they could ask about a home on Main Street that's offering 2.5% and a home on High Street that's offering 3%. And they won't know that I'm going to make more money to sell them the High Street home,
So
right?
you're like, I don't know if I like this other one, but this high street one is there's you
Well,
said there's a an embedded conflict of interest.
correct. And so that was part of the lawsuit, is that there isn't this embedded conflict of interest, and there's this potential for collusion among agents, right? That, you know, by this listing offering more money, it's causing this property to be sold versus another, and there's a lack of equity there, right? For the consumer, so who's being served. So the plan is that when realtors take a listing to sell a home, we will now negotiate only the commission for the listing agent, And then the commission to be paid to the buyer's agent can be offered by the seller, but is no longer required, right? They might still offer it. They can choose. They might still do it because they are going to understand that for a lot of buyers, the buyers aren't going to want to necessarily pay that commission either, right? So we what we don't know yet is how much is this going to change the standard of practice in the industry. So
Well,
that's
how,
going to be really interesting.
if I'm the seller, like if I'm the
Mm-hmm.
homeowner, I hire a realtor and I go, hey,
Yeah,
I'll pay you 2.5%, but I don't want to
right,
pay anything else to the buying agent. So I'm only losing
right,
2.5 on this deal.
right.
What happens? 'Cause I would assume that it
Yeah.
incentivizes sellers to say, I don't want to pay the buyer. So then in that instance,
Mm-hmm.
in order for, and that's where the contract comes in with the with the buying agent, right? With the,
Correct. Yeah. So I would correct your language there, Aaron,
please,
because you said
please.
I'm only losing 2.5%. Now, think about it this way. If your home, based on comparables, could be worth 1.5 million on the market or more, depending on the way the market appreciates, and you try to sell it yourself, you may get buyers offering you 1.2 or 1.3 million because they see that your home is not cleaned and staged, you don't have inspections, you're not prepared, you don't have any of the paperwork, and they're going to, frankly, like people shopping for looking for FISBO sellers are trying to take advantage of that situation, right?
Right.
All of a sudden, you have an agent, you're prepped for the market, you've got beautiful online marketing, you're showing great, you've got all your paperwork in order, you're ready, and you got multiple offers. And all of a sudden, your home sells for 1.6 instead of 1.5. So paying that 2.5 or 3% to your agent was well worth it instead of losing 300,000 you gained, right?
There it is.
So I think people have to remember that hiring a great agent makes you money and actually doesn't cost you money. But yes, buyers will have to negotiate with their own buyer's agent up front and say, the buyer's agent is going to say, hey, my fee to represent you is going to be 2.5%, right? So I expect that when we find a house for you, the seller may pay me. But if they don't, you need to pay me. Someone has to pay me, and because I'm not working for free. Because
Right.
it's my job, it's my profession, it's what I do, right?
Right.
So that's going to be a bit of a change, and frankly, I'm going to start installing this in my business and seeing how it goes. Right? We won't know until we do this for a year or two and see how it plays out.
That seems messy and yeah, well, yeah, let's see.
Yeah.
I
So,
see that being
but
pretty messy. No buyer wants to, because that would just get tacked on to the purchase price.
we think is going to happen is that a lot of buyers are going to end up trying to leverage to do that. They're not going to want to pay it in cash, so they're going to like increase their offer price in order to like include the commission and then kind of finance it, right, so to speak.
Yeah.
But not all lenders are necessarily going to be able to do that, so it is a little bit messier. It's really hard to say, but all I will say in the end is that the purpose of the original lawsuit to push towards professionalism and transparency to consumer, that's the right thing, right? It's that the intent is there. Whether or not in practice that's what will happen, we don't know yet, right? And so I hope. Yeah.
Great. Awesome.
Yeah.
Um, I really liked how you articulated your value there. And I'm glad that I had that slip, because it was important for you to articulate. And that's actually what I wanted to end with was
Yeah.
really articulating the value of working with a good realtor. And you did a great job there talking about the work that you do when working with a seller.
Thanks, Aaron.
And yeah, absolutely. I mean, I refer you to clients, so I obviously believe in the work that you do.
Thank you.
And getting the most value. And I'd, and on the buying side, all the work that you're doing in terms of the neighborhoods. Prior to hitting record, you and I were talking about school districts. I think that's one of the, as if you're a parent, that's one of the number one things that you're concerned about is the school district.
Yeah.
And if you're
Yeah.
not a parent, the school district somehow is important to a future buyer. So that would be in
Right.
consideration when you're looking to buy or sell in a neighborhood in that regard. So yeah.
Yeah.
Well,
No, absolutely.
yeah. All right, Carly. Well, thanks so much for being on. If folks want to get a hold of you, what's the best way for them to reach you?
Well, the easy thing would be if you go to my website, all my contact information is there, and it's carlyseiff.com, Carlyseiff.com. And you can call me, text me, email me,
Awesome. And all your stuff's there on the
anyway,
website.
all my stuff's there. Yeah.
Excellent. All right, Carly. Well, best of luck with all of your clients and future clients
Thank
getting
you.
into the home of their dreams. It's a beautiful thing you do and really needed. And it was a pleasure having you today. Thanks so much.
Oh, likewise, Aaron. It's been a pleasure. Thank you so much for having me on. It's been great.
All right. We'll
Have a
see
good
you next
afternoon.
time. Bye.
Absolutely. Bye bye.
All right. That was another episode of Exponential Wealth with our guest, Carly Seiff from Compass Real Estate, joining us today. Few disclaimers and disclosures as we're way out the door. But before we go, make sure to reach out to Carly or myself if you or someone you know is interested in purchasing or selling real estate and want to know how that might impact your financial life, right? It's very complicated. All the puzzle pieces that you're trying to put together when you're making these large financial decisions. And I encourage you to lean on the professionals that you have in your life to help you make the best decision that you possibly can. You do not want to get this one wrong, and you certainly want to get it right. Aaron Moore is a registered representative with and securities advisory services offered through LPL Financial, a registered investment advisory member FINRA SIPC. Our guest on today's show and their company are not affiliated with SageCrest Financial nor LPL Financial. The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. The information is not intended to be a substitute for individualized financial, tax, or legal advice. Please consult your financial, tax, or legal advisor regarding your specific situation. All right, everyone, take care. We'll see you next time.